Hello, good afternoon, good morning, and good evening. My name is Waladan Forex. So, after countless losses, and I blew my account, my $10 trading account, I made it to $36. I went back to $2. I went to $5 again. Went back to $2. I went to 8, 10, 25. Went back to $5 again. Then blew my account. So I decided that I have to go back to the basics, to the very beginning, and I want to show you the steps I'm taking. And first, I'm doing the introduction to Forex trading. So, what is Forex trading? How the Forex market works, the Forex market sessions, the currency pairs, and understanding bid, ask, and spread is what we're going to do today. So, what is Forex trading? Forex trading is kind of foreign exchange, naturally. It's a currency market, like global market, where people buy and sell currencies. The global market, where people buy and sell currencies. For instance, now you buy the euro US dollars. If the euro goes up in value, you make profit. But if euro goes down in value, you make loss. Know what? Think of it like a currency version of a stock market, where you trade currency instead of company shares. So, two, how does the forex market works? One, the forex is open 24 hours a day, 5 days in a week. We don't trade on Saturdays, and we don't trade on Sundays. Two, it is decentralized. No single exchange like stock market. Like, nobody has control over the market. Like, nobody's calling the shots. Like, if you know what I'm talking about, it's decentralized. Big players are actually trading the game, like bankers, government, hedge funds, you name it. As you are a retail trader, you should also know about these big players. And four, trillions of dollars are traded every day. Every day. I said it's a decentralized system. Fact. What I mean, let me buttress my point in it. It's a decentralized system that is not owned by one person. Not one person has authorities. No one person is calling the shots as authority over it. The market moves based on the value of the currency. So, today we're talking about the major market sessions. What are the major market sessions? We have three major market sessions. We have the Asian trading sessions. In the GMT time is what? It's 12 o'clock. While in the West African time is 1 o'clock a.m. We also have the London trading session in GMT time, that's 8 a.m. While in the West African time is 9 a.m. Back to the Asian trading session. The Asian trading session is slow but predictable. While the London trading session is fast with high volume traders. Now let's come to the New York trading session. The New York trading session is 1 p.m. for the GMT and 2 o'clock p.m. for the West African trading session, West African time. Sorry. So it is very fast and has high volume of traders, same as the London trading session. But the best time to trade is adding the London time frame with the New York time frame. Like, if you look at the GMT time, best time to trade is from 1 p.m. to 4 p.m. because it has a high volatility, high volume of traders. It moves fast, it gives you fast results. Although it's not predictable like that of the Asian trading session. But if you're looking at the West African time, you can trade from 2 p.m. to 5 p.m. in a day. So we move to the next. We look at the currency pairs. We have the major, we have the minor, and we have the exotic. You always trade in pairs. one currency against another, one currency versus the other. If you look at the major, you're looking the euro versus the US dollars, the pounds versus the US dollars, the US dollar versus the yen, the US dollars versus the Swiss franc. Now, if you're looking at the minors, you look at the euros versus the pounds, the euros versus the Japanese yen, and the pounds versus the Japanese yen. If you look at the exotics, you see which have high risks and low liquidity. We have the US dollars versus naira, that's Nigerian naira. US dollars versus the Turkish lira. US dollars versus the South African rand. So for the final of today, what is bid, ask, and spread? Let's explain. Bid is what the broker buys from you at low price. An ask is what the broker sells to you at high price. Spread is the difference between the bid and the ask, and which is the broker's profit. Now, for instance, now look at the US dollars versus euros versus the US dollars. Imagine we're trading at 1.1000 for the euros against 1.1002 for the US dollars. The difference between the two is 0.0002, which is the spread, and that spread in that range is the broker's profit. I should remain other than Forex.